here at Inside ETFs. We're going to talk to a number of industry experts about their products and what's ahead for the rest of 2018. Hi, I'm Todd Rosenbluth, back here at Inside ETFs, and I'm here with Steve Sachs of Goldman Sachs. Steve, we've seen a big expansion in Goldman from a product development standpoint in the last few years. How has that evolved over time?
Yeah, so we launched our ETF business in September of 2015, as you know, Todd. We've grown to 12 products, about $6.8 billion in assets across that suite. That encompasses both our equity side, which is our active beta suite, along with GVIP, our hedge industry ETF, and our fixed income suite. The fixed income side has actually grown by about $1 billion in just the last year or so. That encompasses 3 products there. So we'll continue to focus on those areas as we grow out our business.
So it highlights the importance that investors are not waiting 3 years like they do sometimes with a mutual fund to buy a product. There's been strong demand. Is it coming from just existing clients, or how is that working?
Yeah, there has been fairly strong demand, and in particular in our smart beta suite, the active beta suite. As you know, those strategies existed inside Goldman for a number of years in institutional separate account form. So there was really this pent-up demand, and the reason we actually launched those as our first products in the ETF space is we had clients coming to us, particularly institutional clients, who wanted the strategy, but they wanted it delivered in the ETF wrapper. So that has continued to be a cornerstone of our business strategy, focusing on the core strengths of Goldman Sachs Asset Management and delivering those in the wrapper.
So one of the things I think Goldman has been known for is looking at what's inside hedge funds and then being able to track that index. There's an index that's been around for a while. GVIP is a relatively unique product in the marketplace. I guess maybe let's talk about that.
Yeah, it is, and this is, again, going back to our cornerstone of our business. This is intellectual property that's existed inside Goldman for a decade. Our global investment research group has been producing a hedge fund trend monitor for nearly 10 years, which is the basis and the research for the index itself. And the idea behind the strategy is pretty straightforward. By screening a universe of hedge funds and picking that universe that we think are the fundamental stock pickers, the fundamental equity managers in the hedge fund world, and then looking through 13F holdings, figuring out which are the top 50 holdings of the long equity hedge funds. We spend a lot of time talking about hedge fund performance in this industry, as you know, what's been good, what's been bad, but if you look over time, what really works well is the long equity equation in hedge funds. We think that they have a real advantage in stock picking, and that proves out in the research. GVIP is based on that research.
So Steve, thanks for stopping by the CFRA booth here at Inside ETFs. It's great talking with you.
Good to see you, Todd.